The Fed cut interest rates. Here's the thing. What does it mean for you? You're going to see this all over the news. Anyone that purchased in the last 3 years is probably in the money to do a refinance. I told everyone leading up to the meeting that rates were going to be the lowest right before the meeting. And then if they cut rates, that rates may rise. We'll get into exactly what did happen in a few minutes. But good afternoon. My name is Kevin Retcher with an important economic update following today's much anticipated Federal Reserve meeting. Chairman Powell's remarks at 2 o'clock and 2:30 was that the Fed funds rate was getting cut by 0.25% to a target range of 4 to 4.25. This is the first reduction of this year, keep in mind, and some are predicting 2 more. Some are predicting 0 more for the year. I'm in the 0 more camp. This was in response to slower economic growth and cooling job market and moderation in inflation. Powell also spoke to inflation pressures remaining, that there is a greater concern about risk to the job and economic momentum, meaning the cuts themselves are aimed directly to support growth and keep inflation in check. There was not widespread support for a larger cut, which was a surprise to me. I thought that there would be a few that would dissent on trying to get a 50 basis point cut. Here's the thing. Let's look at what interest rates did at 4 o'clock. Boom, they dropped down to 10-year, dropped down to 3.99, but then they realized what was being said, and the 10-year popped to 4.085. We started the day at basically 4.03, so rates did go up after the Fed meeting. Instantaneously, I had investors raising the rates. So what does this impact have, this cut on mortgage payments? Here's the thing. For the people that were waiting last week and pulled the trigger last week, you got a better deal. For people that waited, they're going to be a little bit worse. If you were someone that never called, you're going to think they got better because the media is telling you that the rates improved. And here's the thing, rates usually are the lowest right before the Fed meeting in anticipation of what is going to happen. So for current potential homeowners, this is good news. If you're looking to buy, the push is downward, not upward. So even though that we're having a little surge today up after the announcement, you can wait for a few economic reports and then you'll start to see it subside leading into the next couple meetings. One of the things to keep in mind, how does it impact your wallet? People that have home equity lines, you're going to see that 0.25% reduction filter through typically in 30 days or up to 90 days. So many HELOCs are tied directly to what the Fed actually does, right? So this could mean lower interest cost on outstanding balances and improve your affordability. Likewise, if you have credit cards, most of those are tied to prime and tracks the Fed moves. A cut in the Fed funds usually is a cut in your credit card interest rate. So that is going to help you slightly if you're carrying some balances. When it comes to if you're looking to refinance and you're looking to see how this might impact your mortgage, you can go to my website, firstmeridianmortgage.com, click on the green button that says live interest rates, and you can go directly to my live rater and check interest rates anytime you want. If you want to start a loan application, you hit the big green button. Here's the thing. The good news is the interest rates were cut 1/4. Bad news is because the economy is slowing a bit. But you got to take the good and the bad when it comes to these things. So if you're looking to potentially refinance, reach out directly for a personalized review. I'm happy to go through that with you. My name is Kevin Retcher. I'm the owner of First Meridian Mortgage. I highly recommend a low cost or a no cost refinance. Keep your opportunities for the next refi. Maybe pay when you think that interest rates are not going to go any lower. But if it saves you money today, if it saves you 3/8 at no cost, you should absolutely take that opportunity when the opportunities arise, and then live to fight another day. Pay closing costs when you think that the interest rates are at the bottom and you're going to have that loan for a while. If the Fed does cut 2 or 3 times into the future, the rates will slowly trend down. But here's the thing, they could reverse very fast, especially with Trump's CapEx spending, the new laws for corporations to be able to write off their expenditures in full. I think that's going to spur inflation. So we only may get 1, 2, or 3 rate cuts. So if you can lower your interest rate for free, and then do it again, and then again, you can maximize your opportunities without spending your dollars. If you want to learn more about how no-cost refi works, give me a call. My name's Kevin Retcher, owner of First Meridian Mortgage. I've been doing no-cost refis since 1996. But here's the thing. The news of the day, Fed cut rates, it's going to help a lot of people. If you want help, give me a call. I'll talk to you soon. 703-799-5626. Talk to you soon.